Cybertruck, they thought they seen a UFO. Praying that I find me
What's up, boys? Welcome back to my channel. Today I'm going to be doing a portfolio update. Fill you guys into some stuff I've been doing recently, and yeah, just kind of documenting what I've been doing. See you at the setup. Alright, I'm at the setup now. I'm going to show you guys my portfolio. Last time I showed you, I think we were sitting... Hang on, let me just check. Yeah, so my portfolio last time was worth around 4.3k, and that's because my dad had deposited some money in recently. My positions were Nvidia, JP Morgan, Bitcoin, and XRP. I'll tell you one thing. Nvidia, I took profit on one trade. No. Nvidia hit stop loss. It was so annoying. JP Morgan hit stop loss. Bitcoin I'm still holding. XRP I'm still holding. Since we last talked, there was a pretty big crash, which most of you, if you're even watching this video, you'll know about it. So let's do my updated positions and my updated portfolio value. You might be a little bit interested at this, but there it is. So the portfolio value right now is 4.1k, up $150, pretty much 4k invested, and only $41 of cash available. If we go to my portfolio, key positions remain the same. Bitcoin, XRP. Bitcoin value is $406. It's calm. XRP, 1,600. Here we go. Let me explain. XRP hit lows. I'll show you the chart. So I currently have 4 buy positions, long positions in XRP, and have a look at them. So I bought it firstly at a price of, wow, the first time I bought it was 2.9. Dang, that's down $65 or 14%. Then I bought a little bit more really soon after. That's down $15, but then I bought the dip. Let's show you the chart. If you look at the chart, after Trump did all the whole China rant, tariffs and stuff, see where I bought. You know what's crazy? Look here. Price dipped to $1.7. That's crazy. $1.70, man. If I had just full ported that right there, would have been generational wealth play. I'm kidding. Yeah, so it dipped. I bought it around there at a price of, I don't know, 2.3, 2.4. So the entire position is worth 4.6, which is good because it means we have a lot of XRP, and we'll see what's happening with the Ripple situation. But bad because my portfolio isn't worth that much. So by having a third of it on one altcoin means that if it doesn't perform well, my entire portfolio goes down, which is a bit psychologically, it takes a toll psychologically, even though I know it's a long-term position, so the profit and loss currently doesn't actually matter. Anyways, then what do we got? Okay, we got Take-Two Interactive Software. That position is worth around $400, up $13 on it. I put money into Take-Two because I know that they develop a lot of the stuff. They develop a lot of the stuff behind Rockstar Games, and so once they come up with GTA 6, it was just kind of a common sense type of trade. Then, you know, I had over $1,000 cash available in the last video. I decided to put $1,000 on the dot into S&P 500. At that time, it was at a low as well. So let's show you the chart. You can see what happened here with the whole Trump situation. This was the 10th when it dropped. Anyways, market crash. Then I bought it when it was around 6,600 this day. Now we're up all-time high, $6,792, which means that my position worth $1,000 is up 7%, 6 or 7%, $70. Next position, Coca-Cola. Have a look. Coca-Cola, $36 profit. So that trade was based off the fact that using this earnings report calendar seeking alpha that I found, I saw that Coke were releasing their earnings report, I believe, the 21st. So currently it's the 25th. On the 21st, I bought, on the 19th or 20th, I bought Coca-Cola stock. I bought precisely around $520 worth of Coke stock, and currently it's up $36. So I didn't really know much about fundamental analysis then, even though it was only 5 days ago. But since then, I've learned a lot about fundamental analysis. And so yeah, I kind of got a little bit lucky because their earnings report was good and it beat the expected performance. So that's up $36, 7%. Coca-Cola is good because I'm gonna read some stuff from my journal, but I was watching this guy, his name was Humphrey Yang, I believe. He talked about how a competitive advantage, your brand, sometimes the company's brand is a competitive advantage, like Nike, Coca-Cola, Apple. Their brand itself can sell their product. So with something like Coca-Cola, I'll show you their chart. Year-over-year growth, they just keep steadily getting higher because it's Coca-Cola and it's one of the most, whoa, actually, hang on. Their chart does not look how I wanted it to look. Anyways, whatever. Coca-Cola has that competitive advantage that a lot of other brands don't. Next position I have. Oh yeah, final position is Bitcoin, $400, $20 profit, simple. Alright, next on the agenda, I learnt what an ETF is. So an ETF is an exchange traded fund, which kind of acts like a stock, but it tracks the price of a market, crypto, commodity, anything, but it tracks it and it gets, it pays out dividends and stuff, which is good. So I was thinking of buying VOO or VOO, which is the S&P 500, Vanguard S&P 500 ETF, which is just stable. Like, you just look at these S&P 500 and you think a normal person with common sense can literally grow their money not for free, grow their money at a really low risk index fund so simply. So that's why I went to investing, because I know that if you're smart and you have a bit of common sense and you have the willingness to be vulnerable and learn, you have the potential to make a lot of money just by common sense. Okay, so let me read what I learned from this video. Keynotes that I got: stick to businesses that you know, use and understand. Make sure that the economics of the company are solid. Use the holy trinity of accounting statements: balance sheet, income statement, cash flow statement. I learned how to interpret these statements as well. Difference between fundamental and technical analysis. Fundamental is financial analysis, management team, economic outlook. Technical analysis, short-term traders, looks at charts, patterns, stuff like that. So initially I wanted to be a day trader or like short-term trading, scalping, whatever you want to call it. But I just found that it's really risky and it's way more close to gambling than investing in companies. So swing trading is better, I reckon, using earning reports and stuff like that. Balance sheet, reports on a company's assets, liabilities, and shareholders' equity at a specific point in time. 2 key questions to ask when you're looking at a balance sheet: what is their cash position? What is their liquidity? Liquidity, current ratio equals current assets over current liabilities. If it's greater than 1, it means that for every $1 the company owes in the short term, they at least have $1 of current assets to pay for it. Income statement tells you how much the company made in total revenue. And here we go. I got a good thing. So I was recommended by this person that I watched the YouTube video to go to Yahoo Finance. And I thought, well, Yahoo's like dead as, like no one uses it. But their finance page is really, really good and informative. So instead of going to sec.gov or anything like that, you can find kind of the key information and accounting statements here. So I had a look at Apple's income statement, and in their report from the 31st of December, they reported huge numbers in revenue and profits, but I learnt about expectations versus results. So even though Apple's new raw numbers were record-breaking, their price dipped because the statement didn't meet the expectations. So before learning about this, I thought that if a company reported having done very well, their price was just going to go up. But no, people have expectations. So people might have thought they were going to do really well normally. So they might have speculated that they do very well. But if these expectations aren't met, they've still done well on paper, but shareholders are not going to be happy because they haven't exceeded or even met the expectations that were put on them, high expectations. Net profit margin equals total revenue divided by net income. If it's below 10%, that's pretty bad. 10 to 20% is okay. Over 20% is great. Cash flow statement details how much money is coming into the company versus how much money is flowing out of the company. Price to earnings ratio is a ratio used for valuing a company that measures its current share price relative to its per share earnings. Current share price over earnings per share gives you the PE ratio. With a PE ratio of 20, investors are paying $20 for every $1 the company earns. Other things to look at: good management team and competitive advantage. So that's pretty much what I got. So yeah, I've just been learning. I'm gonna keep watching videos of people, see what they do. But yeah, I'll keep you guys updated and plan to make another video soon. Hopefully the portfolio has grown to over 4,500. That's the goal I'm putting for the next video. So once I get to 4.5, I'll make the next video, however soon that may be. But yeah, that's pretty much it from me for now. I'm also going to tell you next video about what I want to do post high school. But anyways, that's it for me. See you boys.